we're going to have our next speaker on board, and he is Mr. Viet Nguyen. He's the business advisory partner of NEXIA STT Vietnam. Okay, so a little bit about him. I'll introduce him while he will set up and share his screen shortly. So Mr. Nguyen is a Vietnamese national and a business advisory partner of NEXIA STT with 13 years of experience providing business advisory services in Vietnam. So prior to joining NEXIA STT, Mr. Dung had almost 10 years working and holding senior management positions in Big Four firms with extensive knowledge and experience in providing various business advisory services to a significant number of local and foreign organizations of diversified business areas, including but not limited to licensing, corporate secretary service, transfer pricing, tax compliance, tax review, tax audit assistance, tax planning and restructuring, structuring and tax dispute services. So Dung has experience not only in Vietnam, but also in other countries such as USA, Mexico, Cambodia, and Laos. All right, I'd like to take this opportunity to invite Mr. Nguyen on screen. Okay. All right, and you could share your screen as well to present. Yeah.
Okay, thank you, Rin, for the great introduction, and hello everyone. Hope you had a great day.
You might want to open the PPT on the bottom, the fourth icon at the bottom at the right.
Okay, is it okay now? Yeah. Okay, so thank you for inviting me to the webinar, and it was my great pleasure to get to know all of you. So for my discussion with Rin, so I'm gonna have around 15 to 20 minutes to introduce some keynotes about investment into Vietnam. So I'm gonna do it very quick because some of my contents have already been covered by Dr. Netley just recently. Okay, so basically my presentation will consist of 4 parts. The first one is why Vietnam for investment. The second part is some quick introduction about company establishment in Vietnam. The third part is about the taxation, and the fourth part about other consideration that you may need to take into account when considering to invest in Vietnam. Okay, so why Vietnam? So you can see the I think that because you are here, so you have been making some study about investment in Vietnam. So I'm gonna do a very quick presentation about it. So the first thing is growing population, as Mr. Lê already mentioned. Now we have around 90 million in terms of population, and then it will expect to increase to 105 by 2030. So basically, we have a huge population, and that leads to a very cheap labor cost and skilled worker population in Vietnam. So the second point is that the economy of Vietnam is prospering. So because it is in the development phase and it is prospering, so many new industrial sector will soon appear in Vietnam, like e-commerce or something, and then it will lead to better or more industrial, more business opportunities. The third one is strategic location. We are very near to China and to many other countries in the Asia region, and we have a very huge coastline. So it means that and our coastline is one of the most important shipping route in the world. So it is very convenient for import or export activities. The fourth one is that our government is very political stable and is very supportive to foreign investment. Since our commitment to join the WTO years ago, so we have been opening the market to foreign investor, and the government has been providing a lot of supportive action to attract foreign investment into Vietnam. So I will get back to that later in the taxation section. So the fifth one, as Mr. Lê already mentioned, we have signed numerous favorable trade agreements with EU, with China, with Asian or Chile or some other countries. And the last one is that we have a fast progressing infrastructure. The government has been investing a lot of money into to speed up the infrastructure position in Vietnam. So now we have been building a lot of highways or seaports or even airports, something like that, to make the business easier for investor. Okay, so the second part, the second part, I'm gonna brief about company establishment, because Mr. Lei already mentioned about this, so I will give it a very quick presentation. Okay, so basically, foreign investor can invest into Vietnam under the two following main forms, being the limited liability company or the shareholding or joint stock company. But in fact, most foreign investors will choose LLC. This is a quick brief of the procedure to set up entity into Vietnam. So basically, as Mr. Lei already mentioned, then generally you will be required to obtain two licenses to legally operate in Vietnam. The first one is the IRC, and the second one is the BRC. And regarding the application timeline, so technically it will take around 18 working days for issuance of IRC and BRC, counting from the date of submission of proper dossier. Some other note about company establishment that you may want to find out. The first one is the minimum paid-in capital. So in Vietnam, generally most business areas would not require minimum paid-in capital. It means that technically you can just inject like $1,000 for your investment in Vietnam and still okay. But please note that the registered paid-in capital should be corresponding to the proposed investment project that you are proposing in your dossier. So, for example, if you propose to build a manufacturing factory, so your paid-in capital should not be $1,000 or $2,000 because the licensing authority will challenge that. And in the worst case, they can reject your dossier to set up company in Vietnam. Okay, so paid-in capital must be injected now within 90 days from the BRC date. Okay, the second note is about foreign ownership. So there's no restriction for most business areas. It means that for most business areas that you want to conduct in Vietnam, you can own 100%. Of course, that there are some sensitive business areas that you may need to do a joint venture or something like that limit the foreign ownership ratio, but it's not much. Okay, so sub-license. So as I just mentioned, then IRC and BRC are the most important license that you must obtain first before you want to legally operate in Vietnam. But on a case-by-case basis, depending on your business areas, then sometimes you may need to obtain some sub-license for special business like retail trading or recruitment or labor-related services, and so on. Okay, so the fourth one is the profit repatriation. So the after-tax profit can be remitted overseas on an annual basis, tax-free. It means that you will not be taxed again for when you remit the profit, the after-tax profit in Vietnam to Singapore or to other countries. Okay, and other cash overseas repatriation arrangement may include the payment of service or payment of interest or payment of royalties overseas. But for such kind of cash repatriation, then tax will apply at the rate around 5%, 10%, and 5% respectively. Okay, so we move. So I'm going to move to the third session about taxation. A very brief one about the key tax in Vietnam that you may have to take into account when considering investment. The first one is the corporate income tax. So the standard tax rate of CAT now is 20%, applicable for most every business areas. So regarding CAT incentive, though, we have a very good CAT incentive scheme as part of the government supportive scheme for foreign investment to attract foreign investment. So tax incentive in Vietnam include tax holiday and preferential tax rate. The preferential tax rate may be 17%, 15%, or 10%, depending on a case-by-case basis. And the tax holiday, including tax exemption and tax reduction, and 50% tax reduction. So basically, the incentive may be available for investment project which either fall into the encouraged business areas, so including high-tech, healthcare, software, education, infrastructure, and so on. Sorry. Location, like location with the difficult socio-economic condition or special economic zone or industrial park. Mega project categories. Mega project means project using a lot of investment amount or using a lot of labor, generating a lot of revenues, things like that. Other incentives include the R&D incentive, following which enterprise can set aside maximum 10% of their annual taxable income for R&D purpose. Of course, that the set aside amount should be used for the R&D purpose. Otherwise, then the exempt tax portion will be recollected with some administrative penalties later. Okay, so taxable income. So there's a limited list of exempt income. Otherwise, then all incomes should be taxable in Vietnam. But we have, you should have a lot of deductible spend to be offset against the taxable income. Generally, then only spend that are relevant to the taxable income and supported by proper invoice or supporting documents should be accepted as deductible. So regarding teen capitalization, so now we do not have any teen capitalization rules in Vietnam. Tax loss. So in Vietnam, so tax loss are available. Tax loss carry forward is available within a 5-year period from the date of arising such loss. So it is also a kind of incentive that you may want to take into account. Okay, so regarding the transfer pricing, of course, that we have transfer pricing rules. It means that any transaction conducted between the Vietnamese entity and the foreign entities or other subsidiaries of the group over the world should be conducted at arm's length principle. So otherwise, the tax authority will reserve the right to impose a deemed price or a deemed profit margin for tax imposition. So this is also a very hard issue in Vietnam. So if you want to invest in Vietnam, so you should take considerable account in terms of this matter. Capital transfer tax. In case you want to transfer, you want to sell your Vietnamese entity to other entities. I mean, on the exit phase. So your profit will be subject, your net profit will be subject to 20% without any incentive. So that's why capital assignment tax can be exempt under a number of DTA for a number of special countries. So when you consider investing in Vietnam, you should also consider the location of your holding company, because some countries may have better DTA, better tax laws under the DTA with Vietnam than the others. Okay, so I'm moving to the next important one is the value-added tax, or in some countries called the GST. So the standard rate is the 10% for most goods and services. Some limited goods and services will be subject to 5%. And for the goods that is export outside the country or export to export processing zone, so it should be entitled to 0% VAT because we encourage export. Okay, so VAT exemption will be applicable to certain limited goods and services, including technology transfer, loan, financial services, land use right transfer or share transfer, and so on. So credit method is the most popular one method of VAT calculation in Vietnam. That means that VAT will be calculated by output VAT deducted with deducted against creditable input VAT. Okay, so the third one is the VAT refund. VAT refund is available under certain scenarios, and the most popular ones will be VAT refund for export and VAT refund during pre-operation stage. VAT refund for export means that when you purchase and incur input VAT for purchase materials or things used for production of export product, then such input VAT will be entitled to refund later. And the second one is that when you during your pre-operation stage, it means that if you come to Vietnam and you would take around 1 month to around 1 year to build up your factories and start operation, then the input VAT accumulated during the first 1 year of building the factory will be subject to VAT refund. Invoicing, then now we currently maintain both paper invoice and e-invoice system, but from November 2020, so e-invoice will be compulsory to be applied. Okay, so personal income tax. So foreigners working in Vietnam and Vietnamese citizens are subject to PIT. So the tax rate, so for the tax residents, so the tax rate will range from 5% to 35% on a progressive taxation scheme, depending on the income levels. And the tax resident will be subject to PIT in Vietnam on their worldwide incomes from all over the world. While non-resident are subject to 20% flat rate on Vietnam source income. The Vietnam source income means the income that is sourced from their work and they stay in Vietnam only. Okay, so regarding the residency status, so basically it's quite similar to other countries. I think it means that if the expatriate present in Vietnam for at least 6 months in the tax year, then he should be considered as a Vietnamese tax resident and vice versa. Okay, tax credit under DTA side with other country is available in Vietnam, subject to fulfillment of some requirements. And regarding the compulsory social security contribution, then the employees working in Vietnam under labor contract are subject to compulsory social security contribution. And you can see on the screen the respective rate for local employees is the 21.5% as the employer portion, and for the expatriate employees now is the 3.5% employer portion, but it will soon increase to 17.5% from 2022. So basically from 2022, so expatriate and local employees will be entitled to acquire high rate of social security contribution. But you should not worry because there's always a cap, a maximum cap to calculate the social security. For example, the maximum cap for calculating the 21.5% now is around to $1,400 US only. It means that even if your salary is higher than 1,400, you will only be subject to contribution to Social Security at $1,400 US. Okay, so the last important one is the withholding tax or foreign contractor tax. So basically that you can see on the tables on the slide, you can see on the screen that this is the rate. So when you pay interest overseas, so you will see that you are subject to 5%. When you pay royalties to your holding company, for example, 10%. Transfer of security 0.1%. services 5%, supply good 1%. Okay, so there's always a rate for the depending on the type of income that the foreign contractors derive in Vietnam in accordance with the engagement signed with the Vietnamese entity. Okay, some other tax including the import or export duty. So generally on goods entering into Vietnam are generally subject to import duty. And the import duty rate will vary depending on the nature of goods involved and the origin of the goods. So there are some notable import duty exemption case. The first one is that when you import raw materials or something for production or some other goods for production of the export good, then you will be entitled to import duty exemption. And the second important one is that certain import goods forming figure sets of specially encouraged investment project as stipulated by law will also be entitled to import duty exemption. And for export duty, most export are duty free. It means that there will be no export duty when you export the product. Okay, so on the screen are some other tests which may be taken into account on a case-by-case basis, depending on your business, like special sale tax, property tax, environment protection tax, or NRT, natural resources tax. So you can see it on the screen, and in case later you have any question, then we may discuss further later. Okay, so I'm moving to the last session very quick. It means that other consideration that you should be well aware of before investing in Vietnam, including corporate accounting, foreign exchange control, and label. So because some of the contents here have already been covered by Dr. Lê, so I will not talk much about this. Only some key points. Okay, so this is so regarding the corporate compliance, then you need to prepare company charter, appoint chief accountant, GD. You will be required to do some reporting activities to the competent authorities. You have to be compliant with the firefighting and environment regulation. Regarding the accounting, then please be noted that you should be required to apply the Vietnamese accounting standard and system, and you have to maintain the invoicing requirements, bookkeeping requirements, something like that, in accordance with the Vietnamese accounting standard. And as a foreign investor enterprise, you must be required to prepare the financial statement, and you should have it audited and submit to the local tax authority. Okay, regarding the financial year, so it is at your own discretion. The standard one will be from 1st January to 31st of December, but you can choose different fiscal year. It's up to you. And in case you incur some pre-establishment expense, like the expense that the investor have to pay to the legal firm to set up the company, something like that. So pre-establishment expense can be claimed to the Vietnamese subsidiary, subject to fulfillment of some required condition. Okay, foreign exchange control. So Mr. Lê already mentioned about this. So the capital should be injected into a special account, which is open at the Vietnamese local bank. It is called the DICA. Okay, and please note that when you have some medium to long-term loans from foreign source, such loan must be registered and reported to the State Bank of Vietnam. On the screen are some requirements from the labor perspective, including applying work permit for expatriate employees. And the expatriate employee is also required to obtain temporary resident card or other type of long-term labor visa to legally work in Vietnam. Otherwise, they might be deported later. and you need to report. You need to do some registration and reporting activities to the labor authority as well. Okay, so that's all of my presentation today. So just in case you have any question later after this webinar, so at the end of the slide is our contact, and this is my contact. So anytime you can just give me a call. Okay,
thank you so much for sharing with us. You will join us also shortly in this fireside chat panel.